we have sort of like a discussion to be able to have all this information that we have among ourselves, and we share very typical topical issues that bothers us when we trading. Now, to some point, we at Forex Trading Academy have decided just to leave you guys to do your own thing and find your own path. But also, we also decided during the lockdown that some are making good profits. We are also not in there making profits, but some of our clients are not making profits. So how do we pull everybody along in this journey? So we came out with this monthly webinar. I would suggest that at the end of every month, you block that particular Saturday for this monthly webinar, because we are going to have experts join us. We are also going to share ideas. We are going to pick typical topics from some of the books. So for example, if you don't have the technical and fundamental analysis book, you can just call the office to ask for a copy yourself, because we're going to pick most of the things that we're going to discuss from the, and if you have it also, it will be good. Now, what is the web? It means that at the end of a particular session, we should be able to evaluate the number of people who are profitable on the page. And we want it to be a community that people are being profitable. This concept that I'm picking is a concept from a friend in Australia that is making at least 70 people profitable every single month. And there's a record that he shows for it. And I want it to be replicated in this particular webinar, where we all share the ideas, we all become profitable traders. Now, it must come with your involvement. You have to get yourself involved. We have given the support service, but then if people are not using the support service, we can't help you. You have to use the support service. Also, you have to make yourself available to learn more. There are more tricks in the market. There are more to learn. There are more to get yourself involved. So this is the summary of all the things that we planned for this particular monthly webinar. And I hope you being around for the first time means that you are on board. Thanks a lot for being on board. And for a couple of months, we will now start counting our profits. And so people will start saying, okay, I've made this amount and I've made this amount. And I hope that is the good news that we are waiting to hear. And then I think that that will make our trading very, exciting and having a good journey in the world of trading. So thanks a lot for coming and being on board. And so we are going to roll on today. Now, this is the procedure that we are going to go. So we are picking a topic, and there's another person also joining me to discuss that topic. Now, when we get to a point, we are going to discuss that topic for 15 minutes. And when we get to a point, we now open the floor for questions and contributions. So it's not going to be too much talk, but it's going to be a lot of, how do you call it, interaction and sharing ideas. Please, the same protocol remains. Always try to mute your mic if it's not your turn to talk. And then if you want to say something, just raise up your hand. I will be able to spot you, or the host will be able to spot you, and then you share. Please have an open mind and let's get this whole thing done successfully. Thanks so much again. So today, as we are going to pick a topic of a very good gentleman that understands the topic that we are going to discuss with in-depth experience, is Edred. And Edred, are you with me here?
I am with you, Lennis.
Okay, all right. So Edred, let's know the topic that we are going to discuss. As I said, we are going to have the discussion within the next 15 minutes. Please, I want everybody to pay attentive. And if you want to jot something that is personal, you also join it, and then you ask questions and we'll be able to flow. Maximum, it should take us 1 hour to finish this discussion. And if you have a particular topic that you want us to also discuss or give an in-depth look at it, also drop it in the chat column and we'll be able to proceed with that. All right, Eddie, let's go.
Right. Good evening, guys. So the topic we're going to talk about today is risk management. And you guys know how much we've stressed on risk management in the class. Risk management oftentimes is a boring topic, but it is one of the secrets to our survival in the markets, right? Oftentimes we joke with this topic. Some people disregard it totally. Some people take it too lightly. Some people just take the surface of it. But risk management is very deep. It's very deep. And so we want to go look at risk management today, an in-depth look at it, and see how it can benefit us overall. And it's something we should not take for granted. Right. So, Lennis, I think let me just go ahead and define risk management all over again,
Right.
for everyone to, So, money management, if you read our book, is defined as money management is defined as limit to how much of one's account equity will be at risk on the next trade. Forex trading, there is risk to it. Forex trading is risky. And as a trader, our first mission when putting our money into a trading account is to protect that money. Risk management will ensure our survival. If we discard risk management, we can have a very good strategy and yet we will not survive in the market, right? So risk management is what will ensure our survival, is what will take away or minimize that risk factor that is associated with trading. People who do not learn about risk management come into the market and then blow their money just like that for no reason at all. So it is something that we do not disregard. Right. Lennis.
Right.
Yeah.
Okay. So Eddie, what would you say is a typical risk ratio to an account? And then give me an example.
Right. So in the class, we do advise that you pick a risk-reward ratio of 1:3. Even if it's difficult, you can do 1:2 or better, but never 1:1. And why this is important is that we want to lose small and win big. Lose small and win big.
Too bad. We can't hear. Too bad.
Numo, everyone can hear me.
The network is too bad over there.
Really?
I think we can hear you.
Yeah, Eddie, I can hear you.
Okay, then Numo, I think it's coming from your end.
Okay, Eddie,
hello?
So Eddie, please continue.
Eddie, I can hear you.
Good. So, okay, then I think the problem is from Numo's end. Right.
Okay.
So we advise that if not for anything, a risk-reward ratio of 1:2. That means if you are risking 1, you need to make 2. If you are risking $10, you need to be making $20. And if we remember, we showed an account in the class. You realize that it is possible to even lose more than you win and still be able to make money in the market. Fact is, we can't run away from the fact that you will definitely lose in the market. Whether you like it or not, at one point in time, you will lose in the market. Okay, so we need to get our head straight about that. But then, how do we ensure that even though we lose, we will lose in the market, we can still grow our account? And that's with risk management.
Okay.
If you don't,
Right, Eddie, that is a good point that we need to watch out for. But then, this is a typical example that I've seen a lot of people trade and lose money with. So a typical person will put in $100 to trade, to start trading. Now, the loss size to that $100 is actually bad. Now, remember that when everybody opened their demo account, we said that everybody should start with 0.10, which was $1. But then your demo account had more than 5,000 in it, isn't it?
Exactly.
Yes.
Good. Now, with that type of trading, using $1 where you have more than 5,000 or 3,000 or 10,000, the liberty for you to put your account to risk it's not as huge. But then you deposit $100 into your account and you are trading that same account at $1 per pip. Now, if market goes against you 25 pips, how many dollars are you left with? 75.
75.
And then what is the percentage of loss to that account? 25%, which is
25%.
too much for a beginner to start losing on your capital. Mind you that the reason why we picked this this topic is that the loss to your account actually affects the next trade and the next trade. Now, I know a lot of you are not trading live account. Why? You've deposited $100 in your account, you've traded within 2 days, you've actually get yourself locked up. So normally what people said, you've blown your account, so you can't actually even trade the next trade. And then all day you're sitting down and saying that this does not work. Now, I want to ask Eddie, what is your what would be your typical approach when you put in $100, and what would be your loss size?
Good. So as we realize even from the class, 2% never raise more than 2%, and that is something I always do. I do not want to raise more than 2%. So if I'm to put $100 in it, I ask myself, what is 2% of $100? That's $2. So if I'm picking a trade, which is a 20 pip stop loss, if I'm to use even 0.02 and I use a 20 pip stop loss, I'm going to go above $2. So then, if I'm to use a 20 pip stop loss, the maximum loss size I can use is 0.01. So on a $100 account,
is it feasible that you do use 2%, and is it feasible that you use 0.01 to trade? Would that give you a sufficient profit?
Well, no.
So then let's face the reality.
Yes.
Because you see, this whole thing, we're trying to face the reality where people go through the same approach by depositing money in their account with $100, expecting to make some profit. And that is not reality, because at the end of the day, we don't want to say something that people will actually hear and say, oh, okay, he says I should do this. But the point is that I can't do this. So tell me, from your point of view, what is the realistic loss size you will trade in terms of yourself when you have $100 in your account?
Hello?
Can you hear me?
Yes, please can you repeat the question?
I said, what would be the realistic lot size you use when you have $100 in your account?
Again, with $100, well, you can't put too high. If you want to make significant money, you would have to use a higher lot size.
Not if you.
if I'm to use $100 account, 0.01.
0.01.
Yes.
Are you sure realistically can stick to that method?
No.
You can't stick to it.
0.01 will not make me enough money.
So what will make you enough money? What will be the loss size you use? Because a lot of people here are facing the same thing. We are trying to find a solution to something that is realistic.
Okay. So if I want to at least 0.05 to begin with.
0.05, that is 50 cents, right?
Yes.
What will be the number of pips that you'll be targeting? And what will be the type of trading you'll be using?
So with a $100 account, I can't target a long time. I can't have a long target. So I'll be targeting 15, 20 pips, 30 pips.
Okay, so 15 pips 15 pips will give you $7.5.
Yes.
Is that sufficient?
No.
It's not
No.
sufficient.
It's not sufficient.
Okay. Now, you see, one of the things that I've learned over the years is that in nature, there's sort of greed in our mindset, especially the approach that we used to come into the market. Because guess what? We are all here because we want to make profit. Nobody is here says that I want to be doing this for fun. Everybody is looking for the money. Are we good? Now, if everybody is looking for the money, our approach should be in a certain manner. But then guess what? Our approach is looking for the high bid or the high result of what we're supposed to be doing. That is looking for the money. So you put in $100, and the actual point that you are actually looking for is that you want to then trade and all of a sudden make like $50 in one day. Now, the issue is that that is too much risk on the $100 because guess what? You automatically increase your lot size. And then if that does not go well with you, it reduces your account by 25 to 75%. And you are left with nothing to even trade the market with. I hope you guys are getting the approach.
Yeah,
so
we are getting it.
Then what would be the realistic way of approaching the market? Now, some years back, from the institution that I work from, nobody have ever mentioned the amount of money they've ever made. And I thought, oh, okay, it looks like these people lips are tight as to the amount of money they make. So one day I approached one guy who said, oh, I've made about 1,700 pips for the month. And I was like, woo, okay. If this is $10, this is the amount it would have been. If it's this, so I did the calculation. I was like, hey, tell you are in the money. And the answer was that, no. So how can you make almost 1,700 pips and you still claim that you are not in the money? you get a whole thing. Now, it means that your lot size that you are using times the 1,500 should be able to give you a realistic amount at the end of the month. So how do you even get the 1,700 pips? And how do you record those 1,700 pips? It is part of risk management. Risk management is one important aspect that people just take for granted because normally you do the beginner's course and all that we talked about is that, okay, place your trade, use a lot, put your stop loss, and then those are just formality, practical formality, but they are not realistic when you are supposed to look at the market from a result-oriented standpoint, because what are you looking for? What is your approach to the market? Now, one of the approach to the market is that break your days and your weeks into segments. Monday to Friday, break your days, your weeks into segments. Okay. So start a fresh month. So for example, one of the things that I want us to start with, which is the month of October, is that we start with the month of October because we are going to have this webinar monthly. When we also start doing what we call our community webinars, it means that the community webinars we're going to have it weekly depending on the agreements that we have. That one we need to show results. But let's start with a monthly webinar and see how far we go, and then the approach and enthusiasm with how we approach the monthly webinar. So the most important aspect is that if Monday you record 7 hits, you write it down. Tuesday, if you record minus, you write it down. If you record, so you do it for the week. So every week you have an approach. Now, that approach actually reduce your risk, because at the same time, you want to make money, but at the same time, you've got a formality to it. Now, I know some of you have deposited money on your trade, and within a week, you've blown it. So I'll give you time for you to talk about your experience when it comes to that aspect, and we'll see whether we'll have a solution and then let's see if the way forward is for you to start making good money. So now you've deposited $100, and within a week you've blown the account. You stop trading live, and then it's once in a while that you look at your trade, and then your phone or your laptop, you put it down. How will you develop your experience? It won't come, because the money that is supposed to help you develop the experience is not there. And then now that you've enjoyed how life is, trading demo is not realistic to you. So some of you place a trade on demo, go and roam around, and then that come back and it's in profit, and you close it, and you are happy. Oh, okay, but you won't do that to your normal trading. Some of you too say, oh, okay, I'm too busy, I don't know exactly what to do. So if you are too busy, they place a trade, and then they leave it, and then they come back, they blow the account, and guess what? They look at it and say, oh, this thing doesn't work. But you see, your approach that you use in the demo, you can repeat the same approach on the live. But then, look at it. If you're trading less than 1%, under 1% risk, I can guarantee you, you can leave your trade on and come and blow 1%, and the next day you still have another 99% to try the same 9% by saying, okay, this time I looked at the market wrongly. Let me use this approach by leaving it the same way. What we've talked about for years is that trading is a skill. So sometimes people approach me and say, oh, Lennis, I'm not really making money. And then I say, oh, listen, let's discuss what you are going through, because what you are going through is not new. I've gone through that, but then it is better to now equip others with that understanding. So when we communicate each time, I try to add something new to your understanding, something that you have to at your approach that you look at the market. Some of you trade as if, okay, fine, I don't really, I want good money, but I don't really have the time for it. And definitely, how will you make the money? So then I'll come back to Eddie. Eddie, yes, can you take me through, or do you have something to say first?
Yes, I would like to add something concerning the mindset coming in. Also, greediness can also harm a lot of people.
Okay.
Greediness. As a trader, you need to have a target. Okay. So if, okay, to you, every day you want to make $50. Once you make $50 in a day, you're done.
Eddie,
but then,
if
yes.
you're saying $50, what should be your capital that you have?
$50. Yes. Oh, if you have $1,000 account, $50 is fine.
Okay. So then, if you have $1,000 and you are making $50, then let's look at a percentage of gain and a percentage of loss on that $1,000 account. So then, if 1% of $50 is what?
$1,000, 50. Yes, $50 of is 5% of $1,000.
It's 5%, right?
Yeah.
Okay. If it's 5% of 1,000, is 5% on 5% return a high return?
No.
Okay. So
hello?
someone, Adam says no. But then what I would say is that having $50 return a day on $1,000 is extreme high return. Now, let's take it this way. The reason why it's extreme high return is that if you multiply $50 by a week, 5%, that's 25% of your, how do you call it, account. Do we get it?
Yes.
25%. So it means that within a month, you should be able to make 100% of your capital. And do we think it's feasible?
No.
No, do you get that calculation that we are doing? Because yes, some of you want to make 100% return in a month.
Yeah.
How do we get this 100% in a month? Or how do we get a return that we are making in a way that we are calculating it realistic? Because no, now we are not looking at the risk. We are just looking at the gains. We want to make $50 in a day when we are using $1,000. That means that if we are able to make $50 within 5 days, that's $250. And that is 25% of our $1,000 account. It means that by a month time, we should be able to double our account. True or false?
True.
Yeah.
All right. Now, the question is that, is it realistic? You might have $1,000, and that's where I beg to differ when it comes to having $1,000 and having a target of such an amount.
Yeah.
Now, let's break it down. For example, someone is having $100 account and he wants to make $5 every day. Now, it also means that if you have $100 account and you're making $5 every day, now at the end of the month, at the end of the week, you are supposed to make $25. At the end of the month, you are supposed to double your account.
Mm-hmm.
Is it where the pressure is? I hope you understand. So then you are being forced to use a higher lot size to achieve your $5, or you use a higher lot size to achieve your, your $50 within that week, which puts a lot of pressure on you. Yes, we want to make money, but you see, this is where, in the quest of you being disciplined in money management and risk management, you realize that you now have a niche that works for you. But before you get a niche that works for you, you should have been consistent in your approach. Okay, I use this method and I didn't lose, so I made $5. I use this same method, the next time I lost, but I lost $3. I use that same method and I made maybe another $5. So you want to see a consistency in a particular approach before actually repeating it. Because guess what? We want to measure ourselves every week and every month. Now, when we can measure ourselves every week and every month, it gives us a sort of like a leverage to be able to now have a realistic gain and then return that we want on the account. So our mindset towards our earnings, our profit, is where the issue is. As Eddie said, the greediness and we want it that quick is what is affecting most of our trades. Nobody is saying that don't aim high. That is not what we are talking about. Nobody has ever said that don't aim high. But aiming high also comes with some of the things that happens because you want to make that $50 regardless of whatever. So the next thing that your trade will affect is that your trade will not affect your lot size, because it is the lot size that you are going to use to be able to make that $50. All right, so we've talked for a bit, and at this time we're also going to, we have the next 30 minutes, because it's a 1-hour program. We have the next 30 minutes to actually share our risk management experience. Please make it brief. If you raise up your hand, make it brief, and also let's get a lot of people talking so that we can learn from each other in that. And also, if your background is not, please mute your background. That would be good with us. Any final thought before we start engaging the talk?
Yeah, well, these topics will come while the questions are coming in. So let the questions come in.
Okay, all right then.
Yeah.
Anybody willing to share their experience?
Hello, Lennis.
Hi, Lazarus.
Yeah,
Thank
Lennis.
you.
Yeah, I'm listening to the risk management issues. I think for me that has where I think I've had most of the problem is how many trades do you have to open at a time?
Okay.
You know, because there have been instances where I've blown an account where I have all the trades. Let's say I have about 5 to 6 trades running at the same time. All of them are in profit. Then, let's say I just noticed that I don't really have a target in mind. What I do is that I use the take profit as my target. So okay. I'm waiting to get to the take profit. But most of the time, it doesn't get to the take profit and there's a reversal.
Right.
And when there's a reversal, it's either I'm tempted to close it with a lower profit or wait and see if, it would return to the same direction again. By the time I realize it hit the stop loss and okay. I'm out. You know, so in this case, how many trade can you open at a time? Let's say you have about $100 account. How many trade do you have to open at a time?
Okay, so thank you for the question. And now, one of the things that we traders do that actually affects and blow our account easily is, one, we need to identify correlation pairs. Because you see, when you have certain pairs that are correlated and certain pairs that are not correlated, and we see opportunities in all, and we place a trade on all, that's where you now have what we call the multiple trade. That alone can blow your account easily. For example, we know that Euro USD will go up, USD Japanese yen will go down. But you spotted the direction on both as a good opportunity. So you buy and then you sell. Now, that alone is a recipe for disaster. Now, that combined with actually wrong lot size and calculating your risk in percentage. So now, what you need to be doing, especially when you have multiple trades, is that calculate all your trades that you've entered and sum it into an amount that you don't want to lose. For example, if all your trades are running and they're all in negative, and you have a $100 account and you don't want to lose $15, it means that if all your trades are running towards $15, you have to close all immediately. You don't have to hope that market will return. It will never work. Because see, if you have the non-correlated ones, then whilst one is actually in profit, one can be in negative, and the sum will balance up, and you will not have any disaster on your account. Now, waiting for your trade to hit your TP, once you realize that it is not hitting your TP, it is still wavering within your TP. It's a good thing that you look at that particular trade, close it by telling yourself that this is not the amount you want to hit. So let me repeat exactly what I said. We need to identify whether the currencies that we are dealing with is a correlated currency. And then two, the total of our trade, we need to have in mind that the total of our trade will not exceed a particular amount, because we need to have some money to trade the next account with, the next trade with. So I hope if Lazarus is here. Lazarus.
Yeah, I'm still here.
Okay,
yes.
So is it clear? If you want to ask any questions.
Let me just add one more thing. Let me just add one more thing.
There's noise in the bottom.
Okay, Eddie, please go ahead.
Good. Also, we need to take a good look at our fundamentals when we have trades running. If you are in a couple of trades, you are in profit, and you realize there's a high impact news coming, we need to be able to analyze your trade and either close your trades. Because that high impact news that is coming could clear our trades. Oftentimes we forget and we don't check what is happening, and we are in profit. By the time we realize there is a long candle which has cleared all our profits, because there was a news coming and we had no idea. So every single morning, even before you place your trades, you need to take a look at the fundamentals that will be coming out.
Okay.
Yeah.
All right. So, Lazarus, I hope you're okay.
Yeah, I'm all right.
Perfect. Anybody trying to ask a question or share their experience?
I think David raised his hands in the beginning.
Okay, so David, please go ahead.
No.
David, are you okay now?
Okay, so Profession, please go ahead.
Yeah. I'm heard, right?
Yes.
Yes.
Okay. How about if you have a 5% target?
We can hardly hear you.
Hello, if you have a target of 5%, can you hear me?
The line is
You
breaking.
just go ahead. We'll try to see.
Okay. I'm saying that how about if you have a target for 5% profit
keep making money every day, keep making money. That it's, I know you just struggle. That one will set you back. It's not
I can't hear. I can't hear anything.
Professor, your sound is, we could not hear you well. But if you could type your question there, what you want to share, or the question at the comment section, we'll probably be able to read it. Or check your sound. Who else wants to say something? So
Ray raise his hand.
Ray, please, we are here.
All right, thank you, Lennis. My question is in reference to Lazarus' own.
Okay.
Yeah, he was asking about the number of pairs that we should trade in a trade.
Oh yeah. Okay.
Yes. So
Hello?
mine is it okay to trade only one pair, but
Okay.
number of times in the same trade?
Okay, right. So just to, I think I left that portion of Lazarus not really clear, but then let me clear it. You see, with trading, it really does not matter if you put up 10 trades. It doesn't really matter. Once you said that, okay, I'm putting up 10 trades, but then this whole 10 trades that I put up, number one principle, if all does not go my way, I should not lose more than even 2% of my account, then you are okay. Because I've seen a trend now in sort of like in some people, where some people can place the same currency, they can place it about 10 times. So if it's GBP USD, they place buy. I hope you guys have seen it on Instagram recently, where you have a lot of them.
Yes.
That
Yes.
same trade, a lot of
Yeah.
them, isn't it? It really does not matter to have that same trade in the same format many times. But when it comes to risk management, the question is that the first thing you need to ask yourself, should this trade go bad? Should this trade go bad? How much am I supposed to lose from my account? That is number one principle. Because you see, trading is to live to trade the next trade. It is not about you winning that particular trade. Because you see, that particular trade can go in your favor at a point start reducing, which Lazarus explained that it is going into your favor for some time. You couldn't lock in the break-even trades. And next time we'll pick how to do a successful break-even trade. If you have this, the technical and the fundamental book, I have talked about the break-even trade system in the book, where you need to have a mental mind of where you actually have to put in break-even. For me, as at now, there are trades that I can't afford to lose, and I'll never lose it. Not that I'm super in the market, but I've had that experience so much that it is now part of me. I've placed a trade. The market have moved in my favor, 15 pips. What is my stop loss doing at where it was? There's no way my stop loss should be there. Why? I'll move my stop loss to a break-even session for maybe even 1 pip or 2 pip. Now, worst case scenario, you know, when you don't make profit, as well as also don't lose money. You get it? So it's like, okay, all this effort I put in, after all, I'm not making, okay, $1, I'll take it like that. Or even 10 cents, I'll take it like that. But then, to allow the market to give you 15 pips and allow it to retrace and come back and close you out, and that's what will actually affect your account when you're having multiple trades without having a specific cap of loss that you should be looking not to go beyond. Now, should you trade one account? Listen, sometimes we want to be jack of all trades. And we just have to cease that type of trading. You can actually specify and study one particular currency for a month and focus your mind on that. This currency, I'm going to hit it. For example, my currency, sometimes I don't like telling, oh, this is the currency that I trade and then that, because people might say, okay, they are going in for that. But if you pick GBP, JPY, for example, some people can trade this and know that every time in the morning, this is how it behaves. Every time in the morning, so you've actually watched that, or every time in the evening, this is how it behaves. Now, how can you be an expert in GBP, JPY, if you keep hopping from one session to the other, hopping from one session to the other, without having a personal feel of that? So I know that some of you trade just because there is a button called buy and there's a button called sell. So Lennis says that when it's going up, buy, when you see this, sell, and then that, and you're not putting yourself in the game. Even if you are dating a lady, all of you guys over here, if you are dating a lady, you don't just hold a girl's hand and then you want to see her from afar, study her walks, and knows that at this time it looks like there's a lantern walking in the movement. So you know you'll be able to use that today. So try to study the currency that you are picking. So it's not bad when you pick one particular currency to move along with. Thank you. Okay, 30.
So can I be, am I
Yes, Adams.
audible now?
Oh yeah, Profession, please, you are audible now.
Okay. So I was asking,
Tell
I said, how about if you have a target for, let's say, 5% and profit, and you keep making losses?
Yeah.
You know, you should stop every maybe 2%. Your stop loss should maybe 2%. So you consistently make losses, and you know you can't meet your target. How can you? What do you think someone should do at that point?
Okay, so that will also be the type of approach you are using. So let's talk about trading approach. Now, some of you, when you open your chart, you just look at your chart and say, okay, it looks like it's going down. Now, but you've not documented the things that you are looking at to now know that this particular thing is going down. Now, also, some of you, you need to look at your losses to be able to determine what is causing too much loss. For example, some of you doing a sell trade doesn't work at all psychologically. Some of you doing a buy trade does not work. So you need to really examine. That's why sometimes when we ask people to come for review. It's not about we trying to know what amount you are trading, and then that we don't really. I don't know, someone will come will testify that you've actually brought your account and I said go and deposit money in your account before you come. I don't really care about you putting in real money or trading them. But what I'm concerned about is you having an approach to the market. So, Professor, this is what you can do. From what your approach must be that, okay, what am I doing? Am I a money trader? What am I documenting? What do I need to do? Now, when I place a trade and it results in a loss, do I immediately go and place another trade again? Because this is what people do. They wait till they place a trade, the market have gone against them too much that, for example, a sell. Market is for a buy, but they went for a sell. Market have gone really up, so they've lost, let's say, 20% of their account. Immediately they go in for a buy. Market have gone too high, and market is about to rest, and you are not going for a buy. You will result in a loss again. You get it? So if you must watch when you place your trade, and it is the first one is a loss, the second one is a loss. Please stop the trading for that particular day. You have to refresh your day, especially if you are trading live account. Because this is not a revenge trading. You don't want to revenge the market. So whilst going, I want to win, then you place a trade, and then you go back to place a trade. I can guarantee you, out of 10 trades that you replace the market, you only win one. And we don't want to do that. Use the sensible approach. If you place the first trade, it doesn't go well, and you wait for a while, or you can change the currency pair, place a second trade. If it doesn't work well, if it's a live account, please close that particular trade for the day. If it's a demo account, go and re-examine your trade again and try to look at if you really understand the currency or what you are doing. Thank you, Profession. Thanks for your question. Teddy.
Hello?
Yes, please, if you raise up, let me know. Teddy, please go ahead. Yes. Then after Teddy, I'll take Elom.
Okay, we were talking about focusing in some currencies.
Yes.
That will help us. But for example, me, I was focusing on the 70, the main currency pairs.
Okay.
I'm using an approach of trending. My methodology is trending. Take trades on trending.
Market.
Yeah, markets.
Okay.
But sometimes when I do the setup in the morning, sometimes the whole day, the whole pairs are not in trends. So when it's like
what time frame? Normally, what time frame are you looking at?
5 minutes. Like I do the analysis on 1 hour, 30 minutes, and 50 minutes, and I try to enter on 5 minutes to do like intraday.
Okay.
Because I realize that in scalping, I don't like scalping. So like 1 minute, yeah. So I'm an intraday trader.
Okay.
But sometimes I realize that in the whole day or the whole week, the market is not in
a trend. Okay. Teddy, I think that you have your chart distorted, especially when you over squeeze your chart. So what I think is that contact the support team. Let's have either a WhatsApp video to look at your charts, and because market trends, there's no currency that will not move 50 pips in this market. Some currencies can move back and forth 120 pips, 60 pips up, another 70 pips down. So you can't say that the market does not really trend. So probably it is the way your chart is set, so that you can have a technical guide to exactly, as you say, you use the 5 minutes and then the 15 and the 1 hour time frame. Let the technical team support you. I'm also available to support you to get that fixed, so that at least you will be able to see market movement and place a trade. All right, thank you. Elon, please come on board.
Hi, thank you. Can you hear me?
Yes, please.
All right. So I just wanted to add, something that I personally do as part of risk management, which is aside from maybe telling yourself I'm only risking, I'm not risking more than maybe 2%, as you said, and 2% sounds like the de facto rule, but you can actually lower it, maybe 1%.
Right.
Risk. If you have a bigger account size, you're going to realize the bigger account size you have, you're actually going to be risking more. But I know that is a whole new topic. So, you tell yourself that, maybe I'm not risking more than 2% per trade. So then back to what some guys were saying, okay, what if I have 3, 4, 5 trades? Well, those 2, 3, 4, 5 trades, are they going to be more than that collective 2%, right? So that is one. Two is, I realize that I like to set, I have a daily stop limit.
Okay.
So my daily stop limit can be as a percentage, maybe, 5%. Maybe if I lose 5% of my trade, and that will be, a number of consecutive trades. 5% I'm out, because then, psychology can come in. It could be you're not in the right frame of mind. You're not analyzing the markets, or you're just not in it. Your edge is not working that day. We know that, trading is all about edge,
Yeah.
So that is one. And then you can also have an account stop loss, because the account stop loss is what is going to help us to not blow the account. Because if you set, let's say, 10% of your account as your account stop loss, and you reach that 10%, then what you have to do is, what I do is I go back, or what I used to do at least back in the day, and I'll lie to you, I've blown a lot of accounts. And I'm not talking about $100 or $200 account, I'm talking about thousands, But you go back and you look at your trades, because then at that point, it means that there's something wrong. Your edge is not working. Or it goes back to the guy who said, hey, I always have trades go in my favor, but I don't take profit because I'm aiming for a particular stop loss. Whereas, Lennis was like, what are you waiting for? Once trades moves in your favor, you need to manage that trade, So you're going to, the risk comes, all these components come in. But what has really helped me is setting a daily limit, because then you step away, close your computer, whatever, and step away, analyze it, and then you come back. And then let me add one last thing. And I know that, Lennis, I'm sure you tell your students, but it's one of those things that they'll come to that realization after they've got to a point where, like, you know what, now whatever you tell me, I'll take, which is journaling your trades.
Yeah.
Because after you lose that 10% that you set for yourself, that your account stop loss, what are you going to go back to look at to see what I did wrong? It's your trading journal. You're going to look at how you were trading, your trading patterns, all of the things you did wrong. And then you realize that, okay, I need to re-strategize. Maybe go back to demo, find an edge for, I like to do 60 days, but I know a lot of people say 60 days is too long. Maybe 30 days, and then you come back to your life account. That way you don't blow your account. Thank you.
Thanks so much. Thanks you so much. So in context, what Elon is talking about, the account stop loss, is that sometimes there's a limit that you can set that. Then it means that before you can trade, you have to top up. So it means that when you have $1,000 on your account, anytime you lose more than 200, you have to top up to be able to continue trading in that aspect. Now, as we know, this topic is very intensive. We can go on and on. I would like to see by hand if some of you want us to extend it the next 30 minutes, and then majority will win the vote, that we can proceed. So just show by hand if you think that we should continue for the next 30 minutes, and then we just move on. All right.
Okay, it's fine.
Okay, I think that majority, so we can still carry on for the next 30 minutes. All right, so I think that someone's hand is up. We have Joseph.
Joseph, yeah.
Yeah, Joseph, please go ahead.
Okay, thank you very much, Lennis. I just want to give a contribution.
Okay.
Referring to what, I don't know his name, but the last guy who said there are days where he doesn't see the market trending.
Oh, okay, that's Teddy.
Yeah, Teddy.
Yeah.
I think first of all, we ought to know what type of traders we are.
Okay.
There are people who are scalpers, others are day traders, others are swing traders, others are position traders. For me, example, I've kind of discovered the kind of trader I am.
Okay.
I'm more of a swing trader than a day trader or a scalper.
Okay.
So I've opened trades. I have trades that are running since the past 3 or 2 weeks now.
Okay.
So every day, what I do is just check and manage my trades. When I say management of trades, simply I place a stop loss at a certain point.
Okay.
The trade has moved in my favor a certain number of pips. I just have to move my stop loss. So for now, I'm in profit in some of the trades. I've taken partial profit in some of my trades. So just know the kind of trader you are, because you can't have every pair trending every single day. You don't have to trade
just a quick
day.
question. We get that point. So just a quick question. Now, when you are sort of like a swing trader, what is your stop loss ratio, or what percentage do you have? So number one, do you normally have one trade, or you have one trade? If you have one trade, what will be your stop loss in terms of pips? And then when you're also leaving it for days, as you said, trade management, do you normally move it quicker to break even, or do you allow it to move extensively before you put it on break even?
Okay, what I use, my risk per trade is 1%, strictly 1%. So if the number of pips is more than the 1%, that means it doesn't fit my trading criteria to enter that trade.
Okay.
And then your second question about how fast do I move my stop loss? What I use is the most recent highs, most recent lows. So let's say if I'm in a sell trade, that means we have a low, and then if that low is broken,
then
we have a new low. Then I move my stop loss to the most recent high, the previous high.
Okay.
So that is like I'm following the price action of the markets.
Okay.
And if I'm in a buy trade too, I move my stop loss to the previous low when the previous high has been broken.
Okay.
That's how I.
Okay. So now you see, beautiful, Joseph. So The approach that Joseph is using is a beautiful approach, which will not put stress on yourself, only if your risk ratio is convenient for you. For example, you have $1,000 account, or you have $100 account, and you are losing, you place it, and you are willing to lose 1%, and you actually place a trade with swing. So you leave the market for maybe a day or two. Now, what you should realize is that it gives you that sort of, what we say, the comfort that you know in your mind that this, even if you lose 1% of this account, you are not really bothered. Then automatically it moves into profit. So you kind of see some joy, and you now look at where you are targeting. Now, Alon says something that keep a journal of your trade. It means that if you are a particular type of trader, especially when you are a swing trader or you are intraday trader, there's a way here you need to keep your journal. So that we'll be also be talking about how you need to keep your trading journal. Some people keep their trading journal in their mind, and then some people write it down. So if you have the longest memory, then keep it in your mind. But then if you have the shortest memory, then you have to jot it down somewhere. So I think that this whole thing that we are sharing here is something that some of us will have to be jotting people's approach to correct our type of trading if we are not doing it the right way. All right, so let's have Adams. Adams, if you are ready, please, we are here with you.
Lennis, all is said, though I don't really know what to say again.
Okay, you have
almost everything has been said.
Okay.
One issue is that, you know, the platform.
Yes.
Sometimes you want to place stop loss at a particular point, and then you are not permitted.
Yeah.
Yes, and you have to force it down a bit, and it's very worrying.
Okay, so what normally happens in that approach when you want to put a stop loss in a particular place that the market is rejecting? The market is rejecting means that it is too close to the market price. Normally, the market will give you what we call 4 to 7 pips different, depending on the currency pair that you are actually trading. Exotic currency pair will have means that you have to put it way far. Some can go as 14 or 16 pips away from your entry price. So if you try to put it in a place that it is too close, then you have to check your lot size, so that at least you could have the space to allow the market to actually move. But then should you have any kind of difficulty in that whole approach of just contact us, contact the technical team. We'll be able to help you set those parameters and do some few calculations, especially if you are struggling with the approach. All right, thank you, Adams. Yes. I saw Ray's hand up. If Ray is still with us. Yes, please, Ray, go ahead.
Yeah, mine is not really directly with this topic, but yesterday I encountered a friend that was talking about withdrawals.
Okay.
Yeah, he tried to withdraw a certain amount, like $600, and then he has placed this withdrawal request for a very longer time, but he's still not being able, the request has not been granted.
Okay.
So I'm asking if what we came to meet at Forex Academy, that is the broker we were recommended to, have we had an encounter from our friend traders that they have encountered such a problem before? That's what I want to know.
Oh, okay, so because it's not part of the question, let me quickly brush this whole thing. Now, once it is an institution recommended, how do you call it, broker to you, if you are facing any challenge, the best person to contact is to contact the institution. You said a friend. We don't know what platform the person is trading, and we don't know what account manager the person is linked to. So it is best that sometimes we jump into trying to solve other people's account issue while they are not directly related to us. So that's why we always say that from the beginning, we want to hold your hand. Once you are grown up and you want to do anything, you're on your own. So you don't expect me to waste my time trying to solve someone's account withdrawal that is in a different broker, the person is not a client of ours. And I think that to be fair with me, you realize that it's too much work. For we, as everybody here, we've got that kind of a relation, which we have. So you can walk into the office, you're a past student, and you can request for support and all those things, which will be. If you have difficulty as a past student withdrawing your money, it should take you less than 5 seconds to call the office line for the help to be given. So let's talk outside the platform, and let's know who the person is, what type of broker is using, and let's see if there's a quick way of getting his problem solved. Because one thing for us is that once you've made your money, at least you want it to hit your Ghana account, you know, and you multiply it by the conversion rate and you're happy. So, so let's be looking at that approach. So let's.
All right, thank you very much.
All right, thank you. All right then. Okay. Who is here to ask question, or should I start talking again? Recapping quickly.
Okay, Lennis, please let me come in again.
Okay.
Yeah, mine has to do with my demo account. Yesterday or two, I was discussing with Eddie that I wanted to reduce my demo account to my real account that I want to use to be trading. Sorry, so I lost it. I blew everything. So I want to know if I would be able to open a new demo account, because I've tried that and I've not been granted access to use that demo platform again.
Please see technical team. That problem will be solved.
All right, thank you.
Good. All right.
Larry, can I add something real quick?
Yeah, please go ahead. Hello.
So I just want to say that, you know, for most of us who are not starting out, we have like $100 account or $200 account, right? Like, you know, Lennis is saying, focus on the process, right? If you make, you know, at the end of the month, you make 3%. I'm telling you, like, you have no idea how good you are if at the end of the month you make 3%. But the thing is that you're going to think that you're going to try to make that 3% in one day, right? Let's focus on the process. Let's manage our risk. Let's keep those results consistent. If you're able to make 3% every month, right? Guess what? When you get to that competence level, I don't know, maybe, you know, as time goes on, Lennis will tell you, now there are a lot of funding opportunities out there for traders. You can enter a challenge, and once you pass it, you can get as high as $100,000 account. Now imagine you're able to make 3-4% consistently for, you know, you've proven to yourself that you can do it, and then now you have $100,000 account, and you make 3-4%. That is $4,000. You could live on that. You know, the important thing is let's keep the risk. Let's manage our risk, and the profit will take care of itself.
Yeah.
Thank you.
All right. Thank you, Elo. Thanks so much. Whose hand is also up? If you want to say something.
Adams.
Adams is okay. Okay. So let me do a summary so that we can end very soon. Let me do a summary. So then, I think the reason why we are all interested in this monthly Zoom session is a continuous learning approach. Now, and also being profitable. We want to take it to the next level whereby we will be able to make consistent percentage in terms of like daily percent or weekly percent. Now, please, for us as an institution, we are there. Sometimes I come across people who either they're feeling shy or they feel like, normally people say Lennis is too busy for me, and then Lennis will not have time. That is your mind. Book an appointment, call the support team, and we should be able to get you going. But the fact is that I am not happy if I am comfortable making my 2% in a week making my 5% in a week, and then being consistent profit. Whilst people out there are saying, oh, you know, trading, you don't really make money. And then some of you really have the money, but all that you are doing is that you are just blowing the money because you want to make quick money. I understand everybody wants the money, but please, I want you to look at it from certain calculation point of view. If you want to make $50 a day with a $100 account, you might succeed for only 2 days. That is the maximum this whole world system will give you. For the rest of the days, you might end up blowing it. Then the question is that you become an ex-trader. And if you become an ex-trader, you will see opportunities in the market, but you don't really have the money to approach the market with. So let's have a different approach to our risk management. If what we discussed today is something that you feel like you don't want to talk on the platform or share what you've gone through and you are still struggling, please use the support system for us to help you set your risk management to your account. If you come and say, oh, Lennis, listen, Lennis, I really want to do this. I have deposited $200 in my account, but then I want to give myself this number of months to see how you go with my $200. So let's sit down and calculate how many trades I should trade, what I should be risking and what I should not be risking. And then we'll do evaluation for you for at least every 2 weeks. I don't think that after a couple of months, we should be able to see losses. I think that we should be able to see significant move forward. So this is a challenge I'm throwing to everybody out there, that, you see, it is easy to say that you are making consistent losses. But then it is also easy to say that I'm making a gradual process in the market, though there are losses, but at least my account is not blown. My account is moving forward bit by bit. So in that aspect, we all enjoy the market to a point whereby when we now have what we call the community type of trading, trade ideas, once we put the idea over there that, oh, today is Euro USD day and it's a buy. Now, it just means that once we put it out there, a lot of people will now have that kind of mentality that, yeah, I've been given the signal, all right. I've been given the trade idea, all right. But then I'm going to approach it from this consistent level that I'm doing because it is in you. I've got a group that we are on from South Africa, Australia, and the US, and there are about 7 guys. And we all had a unique account. So everybody was on a flat, unique account. After 3 months, we were left with 3. Now, what happened to the 4 that were in the group? Because when the process was given and the instructions was given, because the target we've given was to hit a number of thousands within certain period of time, some of them want to prove to some of us in the group that they can make millions within no time. So then it's sort of like a challenge. Now, that group could not sustain. Now, you are not in a group, so you are not proving any point to anyone. Right now, you are not making profit. It is not affecting even your living. So what about if you are now making profit? So just take it as if this is something that you want to do gradually to improve yourself. Then finally, you can get off when you know how to do it. A hunter that is good at shooting an antelope will not waste its time shooting a rat. So I'd like to end on that note. At least if I push it to 15 minutes more, we might be silent for a while. So thanks to everybody that have commented and asked questions. Thank you, Lazarus, for being part. Thank you, all of you. And please, as I said, if you want us to treat a particular topic, drop the topic in the comment section. And if the topics are coming frequent, instead of doing it monthly, we might probably will have to reduce it so that we have more engagement and we learn from each other as time is not on our side anyway. December is around the corner. So those of you who want December cow and goats, I know that you have to, try to put in place your risk management so that at least you get some money for December festivity. All right, Eddie, if you can sum up.
Yes, so I think that will be all. Thank you everyone for contributing and for engaging in this. Next month a new one will come, and as Lennis said, not just in the comment section here, on the WhatsApp platforms, drop your topics that you're interested in that we should discuss the next time, and we'll take a look at it. And then the one with the topic that comes up more, we'll definitely do it next. So thank you all. We see. Bye bye. Have a good night.
Bye bye.
Bye.
Yeah. Thank you.
Achu James.